Hello, I'm John Kogan, the CEO of Performative, the leading platform for professional development across the Office of the CFO. I'd like to welcome everyone to today's event entitled Budgeting in Excel. I'd like to thank our sponsor, Altius, whose commitment to thought leadership in this realm helps us make this educational webinar possible and delivered at no cost to the participants. No one likes budgeting. Budgeting is frequently a painful process for finance and non-finance professionals alike. The increased demand for more frequent and accurate forecasts has only increased that burden. However, there are keys to making it work across the organization regardless of technology. This webinar will discuss how to create and manage a real corporate budget in Excel, including Excel features that can be utilized to improve the process's accuracy and scalability, along with some insight into ways to complement and even expand beyond Excel. We have a number of learning objectives for today's event. I won't read all of these. However, we will certainly all know a lot more about budgeting in Excel, and we're going to be looking not only at PowerPoint slides, but a number of different live Excel examples from our presenter today. So we're looking forward to great education today. We do have a few notes before we get into the event, so let's go ahead and run through those quickly. If you look at your GoToWebinar control panel, you'll see a section there called Handouts. And there you will find a copy of the PowerPoint. You can just click on it, download it, and have that for later. Also, within the next 24 hours, we will send you an email, and it will have both links to both that presentation and to the recording of today's event. So you'll be able to get that PowerPoint two ways. We are offering CPE for today's event. We have 3 polling questions. The third will come at the very end of the event, so keep your eye out for those. If you have any questions at all about CPE, just email us, cpe@performative.com. Now, we would like this to be an interactive session. We do have some time set aside towards the end of today's event for Q&A. So please do ask questions. We're always happy to work with our speaker to get those answered. So ask as we go, as we usually attack those questions on a first-come, first-served basis. So if you ask a question earlier, chances are better that we'll get to it. Okay, also, just a reminder, after we close down the event, we have a brief survey, which comes at the tail end, and we greatly appreciate you giving us that final minute so that you give us feedback. What did you like? What did you not like? That helps us do better the next time out. Also, if you like what you hear from the speaker and you want to connect with the speaker or today's sponsor, Altius, then we make that really easy to do in the post-event survey. So all of that comes at the very end of the event. All right, we'd like to give a quick welcome to Performative. We've got many long-timers on board today. We've also got many first-timers on board. Thanks so much for joining us. Performative is the leading professional development resource for every member of the Office of the CFO. We have an extensive online peer-to-peer knowledge sharing community. We have over 10,000 threaded conversations going on at any point in time. Anything from budgeting and forecasting to all manner of technical finance, accounting, and other related issues. So great way to learn. We also do about 200 of these webinars every year, so 3 to 4 days a week. We do webinars like this, and thanks for joining us today. And also, we recently launched something we call Performative Academy, which is currently over 220 finance, accounting, internal control, treasury, and related courses. We add about a course a day. They all come with multiple CPE certification types, and they all feature great, wonderfully experienced finance professionals, just like the one we're going to hear from today. So please do check out Performative Academy. If you'd like to learn more, you can also tell us so on the survey. We'd be happy to let you know more. All right. Without further ado, let's go ahead and introduce today's speaker. Today's speaker is Simon Turner, who's an international finance and operations executive. Simon has over 20 years of experience in international finance and business. For the last 10 years, he was VP Finance at Oxford Immunotech Global, PLC. He took the company from early stage startup in the UK to a NASDAQ IPO in November 2013. So that's one of the pinnacle events in the life of anyone in the Office of the CFO. In that role, he built countless budgeting, forecasting, financial projection, and capital structuring Excel files. Probably wish he could relive that time and do it with something more useful. But he has an incredible amount of experience with budgeting in Excel. and he leveraged his earlier experience with Deutsche Bank, JP Morgan, while he was doing that. Simon has a Master's in Engineering in Chemical Engineering from Imperial College London, as well as a Master's of Science in Finance from the London Business School. And he is a qualified chartered accountant as well. So, Simon, exactly the kind of background that we like at our events. You're really steeped in what you're going to be teaching today, and we are very happy to have you on board.
John, thank you very much, and welcome to everybody. So, as we said in the flyer, everybody hates budgeting, and so my experience is that you mentioned the word budgeting and there's just groans all around. So the aim of today's webinar is to help people overcome that problem, and we're going to use that, do that using Excel. So the agenda for today is, firstly, we're just going to do a recap of what we're trying to achieve in the goals of budgeting. Secondly, working with operations. Operations people, as a rule, when you start talking about budgeting, they throw their hands up in the air and say, oh, here we go again. So what can we do to make that whole process easier, get better outcomes for ourselves, and make their lives easier too? Thirdly, I want to just go through experience and budget timing, approximately the cycle that you need to go through in order to get a good outcome. Then we're going to look at Excel, how we can build Excel in such a way that we cover all our bases, and yet at the same time we're effective. And finally, we're just going to spend a couple of minutes looking at what the world beyond Excel looks like. So before we start, I just wanted to go into the first polling question just to get a sense of where everybody is. Over to you, John.
Right. So this is one of those level-setting questions here that helps us understand who is on the call, and that can help Simon tailor his presentation a bit. So the question is, what best describes your current use of Excel in the budgeting process? And you'll see we've got 5 different choices there. So as always, we will leave that out for about 30 seconds while folks take the poll. And then we'll close it up and give Simon a moment to comment on this polling question. As a reminder to everyone, we are offering CPE for today's event, and you can download the slides in the handout area of your GoToWebinar control panel. Okay, so I'm going to go ahead and close down this poll, and then let's go ahead and share out the results. So Simon, hopefully you can see that. So the question was, what best describes your current use of Excel in the budgeting process? And what do you think of these responses?
This is great. It means that we've tailored the webinar to the audience pretty well. So what we're going to cover today should really address those 2 groups. We only use Excel, and the Excel combined with accounting software.
Beautiful. All right. Well, then let's go ahead and get back to those slides.
Great, thank you, John. So first of all, let's look at the goals of budgeting. The first thing we want to do is we want to take the corporate objectives that we want to achieve, and we want to turn that into a financial performance, some financial plan that captures all of the objectives and the implications. Second goal of budgeting is to take those objectives and use them to communicate to the organization what it is we're trying to do. Sometimes we forget that we sit uniquely in finance in the data stream between the different groups, and we have a key role in helping other parts of the organization understand what it is that each group is trying to do and what the overall objectives are. Third goal of budgeting, really important, is to guide our investment decisions and to help us decide where we're going to allocate our resources. We don't have unlimited resources, so we want some kind of framework to help us identify constraints and identify priorities for our resource allocation. Fourth goal, inevitably, out of this, we're going to have what we would call our budget or our base plan or something similar, and we're going to use that to benchmark our performance, both as an organization and individually within the organization. And finally, if we build our budget well, we can actually perform some flexing of that budget to work out where the limits are and where potential problems could occur. And we will come to that later in the presentation. I'll show you how within the files that we create, if we could produce some killer Excel files, we can actually flex our budget really easily. So let's just have a quick look at why the budgeting process has really sped up. So historically, budgets were created centrally by the finance function. They were pushed down from the finance function down to the operational groups with some collaboration, and they were essentially a backwards-facing reporting. Today, the challenges of the world are such that the pace of change is incredibly high, and it's a lot more complex. And so the demands on budgeting are rather different. First of all, we need a much higher level of collaboration. We need much greater input. Finance function now is a much more of a two-way flow between those groups. We want regular updates, so really we want to be moving on a 12-month rolling forecast, and there's as much an interest in the forward projections by the executive team as reporting on how we did historically. So let's get into how we deal with the operations people and how we can make their lives easier. So here are a number of objections that you may have come across when you talk to folks and say, hey, let's sit down and do your budget. First one is, budgeting is not for me, that's done by finance. Second one, I don't have time, can you come back next week? Another one, how can I budget when I don't understand finance? And finally, I can't budget unless sales tell me what their number is. We'll come to this last point in a second when I get into the first Excel demo. Now, one of the things that we can do to make our lives easier and to help the operational groups just break down the barrier to budgeting is to resist the temptation to use the jargon that we're so familiar with. So, things like tangible assets, accruals. We can explain that to people by saying, you know, it's like buying something on a credit card. It's amazing how often when you sit down and try and build a budget with people that they actually start thinking in cash terms and say, well, the bill isn't payable until three months' time. Yeah, but you spent the money now. Similarly with prepayments, it's like buying a year's insurance ahead of time. We need to help people understand that the way we budget isn't just purely on a cash basis. And equally, how do we allocate spend between CapEx? So let's get into the first demo, Excel demo. Excellent, thank you very much. So one of the things I want to get across today is that a lot of people, when you talk to them about budgets and building the budgets, they say, oh, it's very complicated. There's an awful lot we have to bear in mind. And actually, I want to challenge that assumption quite seriously. What we want to focus on is the decisions we're going to make and separating those from the inputs into our calculations. And to do that, let me just take you through an example of building a revenue projection using a rep productivity model. Let's say that our corporate objective is that we want to increase the run rate of our sales by 100% in a 12-month period. And we're going to do that by increasing the number of sales reps, and we're going to launch a new product. Here I've called that product C. And we're going to do that in July of 2015. And in addition to doing that, we're going to need to hire an additional sales manager headcount. So what are the inputs? What are the decisions that we need to get people to focus on? So just to explain the formatting and the different colors of my files here, what I want to do is I want to get people to focus on what goes into the file and what's mechanics. The inputs, for me, is in red. Now, you may have your own style. It doesn't matter. Just have a style and keep it consistent. So the things I want the salespeople to tell me are, what is your hiring plan for these new reps? What is the existing rep productivity for each product? And thirdly, what is your current pricing? If I have those things, I can work out what our revenues are going to be. And by building it this way, we can flex it if we need to. Now, one of the things that we have to deal with is just because you take a new rep on doesn't necessarily mean that they're productive straight away. So how can we allow for that? Well, I've got an input here that basically says, here's my rep productivity delay. So whilst I've got my new rep here and he hits my payroll, so I'm paying for him, he's not actually productive until a month later. And I've done that using an offset function. So now that we've got our productive reps, we've now got our volumes. Here are our products. Here's our pricing. So here's our revenues. Now that we've got that information, we can go straight to our payroll, and by adding in the sales director and the sales managers, and again, all we need is the inputs, how much they're paid and what's their start date. So for example, if I want to change this from the second manager joining from July to August, all I need to do is change that to the August, and automatically the calculations drop him out of July and just defer until August. I've got my sales rep salaries, I've got a bonus calculator, and I've got my sales commissions. Now, one of the things when we budget is we don't necessarily want to be paying 100% of our sales commissions out if we achieve budgeted level. We want our sales people to be reaching further. So I've got another input here which says, what is my payout rate for achieving budgeted sales? And I've set that to be 80%. So now, with the inputs that we've already agreed in order to achieve our revenues, now I can drop out using additional inputs like the healthcare cost per person, the payroll taxes, and our pension costs as a percentage of salary. I can now drive our entire payroll calculation. And I've taken that problem away from the operations. And these numbers are in green because I've set those centrally, and when we come to the second Excel demo, you'll see that those are set in the master file. Further, I can actually use my headcount to drive my CapEx decisions. I know that when I hire a new person, I need a new laptop for that person, and if it's a rep, I need some new sales equipment. So I've got my headcount. I can use that to drive my CapEx calculations based on my starting book value and a reducing balance basis. I can work out what my depreciation charge is. Again, nothing here is a decision that's being made by the sales team. It's something that we're handling for them through our files. We can do the same with travel. Here's my travel cost per rep, travel cost per manager. Again, it's used using headcount. So actually, the number of decisions that we're asking the operational group to take are limited to what do we want to get in terms of the revenues, when do you want to hire people, and what are some of our additional lower level charges. All of that then goes into what I've created, this interface file, which can then feed the next part of the process. So remember in the slide where I was talking about I can't budget until I know what sales want. Well, now we've got the sales number. So I can take these volumes, and I can take them and feed them automatically into my manufacturing budget. So here's my manufacturing interface. I've got my numbers in green signifying they're coming from another file. And now my manufacturing conversation is, okay, tell me about the manufacturing process. If I give you a certain number of volumes, how can we work out what the costs are going to be? Now, it may be, as I've done here, that one of the primary components actually has a different pricing grid depending on the monthly volumes. Well, we can deal with that. By using a lookup table with an inexact match, we can take the volumes and just go to that table, and we can drop out the pricing. That then gives us our totals. We've got the additional inputs here in red again for the other components. Now we've got our total material cost. If we then quiz our manufacturing people to say, okay, how many operators does it take to produce one unit? Now I can derive my total operator hours. Again, we're not going to have 100% productivity, so I've got an input here for my operator productivity. Again, I've set that to be 80%. So now I've got the number of operators required in a given month to manufacture product A. I've done the same for B and C. So now I've got my total operator headcount, and of course, I need to round that up because we can't have a fraction of an operator. So given that information, we can feed that straight into our payroll, just as we did with the sales reps. Now I've got my director and manager. I just need to make some decisions about what their pay is. Their bonus is probably contractual. We've got the average operator pay, and now my payroll drops out in exactly the same way. Similarly with CapEx. I'm probably going to need any computers and laptops for those new people. But also, it's possible I may need a new machine. So let's build a calculation that says, okay, what's our total monthly throughput? what's our machine capacity, and when do we need a new one? It turns out that given the volumes that sales have given us, we're going to need a new one in May. All of this is an automatic calculation. All I need to do is drop in those volumes out of the sales file, which is an automatic link, and bingo, there we have it. So now we need to do a bit of work on these additional overheads, but the really hard part is all built in, and we can then go back, and here are our outputs, which we can then feed into our master file. Okay, John, that's the end of my first demo piece.
Fantastic. So we're going to see a couple of other demos, and it's so great, Simon, having the ability to actually see what you're talking about on the slides live. Now, interestingly, we have another polling question right now. So I'm going to go ahead and launch this second polling question before we get back into more slides. So Simon, as we did last time, we're going to leave it out for about 30 seconds so that everyone has plenty of time to take the polling question. The question is, what is your biggest budgeting challenge today? You can see we've got a number of different options there. One thing that we've been getting a number of questions about is can people get access to the Excel file? So we're going to be offering access to that Excel file along with the course that Simon is putting together. It's part of our Academy platform, which I talked about earlier. So that will be available as part of the course, and we hope to have that out by the end of next week. So keep your eye out for that, folks. I'm going to go ahead and give 5 more seconds for the polling question, and then we will shut that down. And like we did last time, we're going to share out the results, and we'll let Simon comment. So let's see what we get here. What is your biggest budgeting challenge today? I can't say I'm too shocked at that top item. Simon, what do you think about what folks are saying here about their biggest budgeting challenges?
Yeah, this is very much ties in with my experience, and that's why I wanted to just touch on in the first part of the presentation about the organizational indifference and what we can, some of the ways we can address it. And Excel is a great way to do that.
All right, great. So onward we go, and Simon, back to you for more slides.
Okay. So we've started now having the dialogue with the operational groups about how to build a file that's meaningful for them. So the next thing we need to do is we need to actually book time in their diaries. Now I just want to go through and spend a few minutes just looking at a budget timing that has worked for me over many years. At some point, the executive team are going to sit down and work out what are our organizational objectives, what do we aim to do in the following year, and I'm assuming here that this is a calendar year budget. So let's say they do that in early September. We're going to build the models, the finance team are going to build the models with the departments in September, and then we're going to pull together a first draft in October, which then the executive team are going to sit down and review in the middle of October. Now, based on that review, they may look at it and go, oh my goodness me, that's way more money than we've got. We can't possibly go down that route. We're going to have to reiterate and resync our whole objectives. So it's inevitable that the next step will be another iteration. And if we've built our files in the right way, then we shouldn't need to go back to the operational groups to change much unless we're having a radical rethink about what it is we're doing. So let's say that we get that done by the late October. Now we go back to the executive team and say, okay guys, look, here's where we are. This is what the second pass looks like based on your comments from last time. And assuming that all goes well, they're happy, gets sent out to the board for review and discussion. We need some forum to pull those comments back. Let's say that happens in the middle of November. And we get a final draft done in late November, which means that we can get final approval in December, and it means that when we start on the 1st of January, we all know exactly what it is we're doing. There's nothing worse, I think, than having the budgeting process drag into January, particularly when the finance team are trying to get their year-end closed. So the next step we want to get to is we actually want to get to a 3-month planning horizon because of the demand for better forecasts and forward-looking numbers. We really want this to no longer be an annual exercise, but an ongoing exercise. first thing we need to do in the finance team is make sure that those early numbers in January, February don't deviate much from the budget. If they do, we need to understand what's going on and take corrective action pretty quickly. Assuming that that's all gone fine, we're going to do a reforecast in April, and we're going to do that on a 12-month basis. We'll do another one in July, the project's out to June, which means that when we come to do the third one in October, we've already got a substantial chunk of the information, and we're going to reforecast Q4 as part of that budgeting process, which also means that we get a very nice cutover from Q4 to Q1 because we're looking at it at the same time. We're not asking people to do one reforecast and then the budget a bit later, and then items get missed in the switchover. So, the Excel structure. This is the real meat of what we're going to do. So, I've put together for you today a basic file structure that has the following. There's the master model and reporting file, the revenue and cost file, which we've just looked at, a marketing cost file, a manufacturing cost file, and a central overhead. And of course, you can add any additional departments to that that are applicable for your particular enterprise. And in doing this, we want to make these files as user-friendly as possible. We want to be efficient for us as well as for the operational groups. And so for those people who answered constrained resources within the finance function, we need to make this budgeting process as slick as possible so that it's not taking up too much of our time and we're not having to do manual work in Excel or in whichever process that we're following. So how can we do that? Well, we can use key variables and common inputs. So, for example, like that healthcare cost per person, like payroll taxes and so on. We want formula-driven outcomes. So we want to put in what are the decisions, what are the inputs, and then have formulae drive the answers for us so that we're not having to sit down and rework and rework. We can use linkages between files. So just as we saw before, we can take those sales volumes and we can drop them into our manufacturing plan and have numbers come out the back of it. And step change calculations, just like we did for the machines, to work out how much machinery we're going to need and how much that's going to cost and when. And finally, and I'll come to this in the marketing piece, we want to use operations own tracking tools. Inevitably, we're going to find that people are already tracking costs or events or something in their own Excel files. Well, let's take those. Let's put those into our Excel files. And now budgeting is not separated from their own planning exercise. It becomes a more integral part of it. And it helps them just get more comfortable with the budgeting process. And it also makes it easier for them because they can just go and change the file they're already accustomed to changing, and we can then just suck the numbers out of it and put it into our own format, whether that be GL codes or whatever it is. And finally, we want flexible assumptions. We can't do scenario testing if we don't have the ability to move those numbers in a quick and simple way. And I'll show you how one way of doing that in the master file. So, without further ado, let's get into that master file and the remaining bit of the Excel demo. Great. Thank you very much, John. So, here is the master budget file, and this is the real skeleton on which we're going to hang all of the individual operational pieces. This, I'm going to take it from the back forwards, just because I think that the flow is a little bit better to do it that way. So here at the back, I've got my the import of all of the information from the different files. So my revenues are coming out of my sales budget file here. And my cost of goods are coming out of my manufacturing budget and so on. So this is the page where I'm sucking all of that information out of the individual files in Excel. We're then going to also suck out the CapEx information and the depreciation and bring those together, firstly, into one profit and loss. So here I have my individual revenues, I've got my cost of sales, my sales costs, my marketing costs. That gets me my gross profit number. and my gross profit percentage. I've got my central overhead, my profit before tax, a tax calculation, which is again driven by another input on my inputs tab. And now I've got my net profit number. Now obviously tax calculations are more complicated. I wasn't going to get into all of the brought forward stuff. This is for illustrative purposes, but that is quick and simply how we can put together a profit and loss account. That's all reasonably straightforward. The cunning bit is now taking that information and building our balance sheet and our cash flow in such a way that it all recalculates automatically. So, in my balance sheet, I need obviously my brought forward balance sheet. And then I'm going to use Excel to calculate all of the things that, all of the forward numbers in my balance sheet. So in my fixed assets, I'm going to take the sum of my CapEx, less my depreciation, and add in my brought forward balance. For my debtors, I'm going to accounts receivable, forgive my English jargon, I'm going to take my revenue and my debtor days, which I've defined in this file. And in my base case, I've defined that to be 40 days, my creditor days to be 20, and my inventory days to be 30. So now I've got an estimate of what my accounts receivable is going to be based on those revenues. I don't have to go and separately recalculate those numbers as soon as we change our revenues. The whole thing is going to be done for me by this file. Now prepayments, they tend to be pretty constant, so I've just put those in as an input. Inventory works in exactly the same way. I want to know how much do I have to hold in inventory for a given level of sales. So I need to take my inventory days and multiply that by my material costs. I'm not going to be capitalizing all of my other direct manufacturing costs in my inventory. The reason for that is if I do, then I don't get the full cash benefit. Now, if you do want to do that capitalization, then we need to build in an adjustment for this. But for this exercise, I want to know what's the cash impact. My cash is the sum of my cash flow statement plus my brought forward cash, and creditors works in the same way. I've got my working capital assumption. Accruals, they tend to be reasonably constant, but there's no reason why, if you've got seasonal accruals, you could build it out that way. Finally, I've got a long-term liability. Here's my share capital, and here is my all balanced out balance sheet. And forgive me, I've done it in the English style rather than the American style, but I hope you get the general idea. So now I've got my balance sheet. I can work out what my cash requirements are going to be in any given period. And here they are. Now, one of the things that I advocate for people is to do these calculations monthly. And there's two reasons for that. The first one is that every business has seasonality of some sort. And depending on how bad it is, for example, do you have a run-up in sales that then dies off in November and December because nothing happens after Thanksgiving? We really want to capture that on a monthly basis. It's very difficult to capture on a quarterly basis. And the second reason is that particularly when you look at your balance sheet or your profit and loss, and if you're living in a world where you've got debt covenants, you want to know as soon as you dip below or above a particular level. Doing it on a quarterly basis isn't necessarily going to tell you that. So here are my financial statements produced on a monthly basis, and I can now take those and produce a summary sheet, and this may be what I present to the board, because now they can just see the numbers on a quarterly basis of the simple profit and loss on a quarterly basis, the balance sheet, key buckets, and our cash. So using all of those things, I now have my fully integrated, all singing, all dancing file. So now I can go away, I can work on the individual operational budgets, and I can pull those numbers into this file, and I can spit out the numbers that I want at the end, all without substantial rework. Now, there's two things I wanted to look at here. The first one is, where's my marketing? Right, so in marketing, I wanted to, we've done things in a very similar way. We've got the payroll, we've got our inputs, who we're hiring, bonuses, and so on. We've got CapEx done in the same way. Here they are asking to buy another marketing stand, so that's an item of spend. We've calculated some overheads, but just for a simple illustration, let's assume that this is a working sheet that they have for their conference attendance, and they've mapped out by individual conference what they're going to do and when they're going to do it. So when are they going to have to pay for the booths in advance, and so on and so on. And I can take that, sum all that up, use their information, and just drop it in to my GL code summary. I've taken their operational file and just incorporated it within the budgeting process. So let's go back to the master budget file and look at how we can flex some of our numbers. So when you look, I've built in a calculator that basically allows you to flex our working capital assumption. So I've got a base case of 40, 20, 30, a downside case of 50, 15, 45, so everything goes the wrong way, and an upside case where everything goes for us. So when we look at the company in total, you'd think this is a pretty good company. It's making a net profit. We're operating at a decent margin. It all looks fine. And you look at the balance sheet, and our cash requirement is pretty good. We started at 100,000, and we dipped down to 89,000 in February. But then it picks up from there as that expansion from our sales rep productivity starts to kick in. But this is where the beauty of having a flexible file comes in, because if I select my downside case, it picks up my changes here, and now I look at my balance sheet, something drastic has changed. We're now over $120,000 in the hole. Why? Quite simply, the working capital requirement of our expansion has sucked all of the money we had in our bank account and some more. And that's a really critical bit of information for us to understand. And you can only do that if you've got a file that allows you to flex those numbers really quickly and easily. So that is a admittedly whistle-stop tour of how to put together an Excel file that draws together all of the individual pieces that we want to have in order to be able to budget in a way that's operations friendly, but also gives us what we want efficiently and allows us to flex and understand what's going on. Because one of the first questions we get when you go through that second iteration of the budget is, well, what if we change this, this, and this? And it's great to be able to give those answers in a very quick and speedy way. Okay, so let's look at a world beyond Excel. So I hope I've been able to demonstrate to you that Excel, if you build it in a methodical way and with some good structure to it, it's an incredibly powerful tool. But it does have significant weaknesses, and they can really undermine what we're trying to achieve as we go through the budget process. First one is managing the workflow, the handover of files backwards and forwards between people. There's all sorts of opportunity for things to go wrong. Second one is version control. We've got, well, one version, the operations group got another version, maybe they forgot to send it to us, who knows. But that equally can be big problems because we're not capturing the right information. Thirdly, Excel doesn't track changes. It's wonderfully flexible, but it doesn't tell you who changed what when. So if you're not careful, you can end up in contests, well, I didn't change it, it must have been you, backwards and forwards, which is never a helpful place to be. There's limited error checking. Excel can identify Excel-like errors, but it can't say, no, 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 you can't have a negative accrual or a negative prepayment or something like that. We need to have our own checks in there, or we're going to have to find some other way around that. And finally, the central storage of files. How do you manage when you're trying to store, the finance team are trying to store the files, and they've got their own sort of segregated part of the server, and yet we're trying to give access to other people to be able to get to the same files. People usually end up emailing them backwards and forwards, which is less than ideal. So here are some manual solutions to these limitations in Excel. This one I found to be the only way to do it if your process is entirely driven in Excel, and that is to have one person in the finance team that owns the entire process and is dealing with all of the version control and dealing with each of the groups and getting the files back. That doesn't mean to say that they have to do all of the work, but they sit there as the spider in the middle of the web, pulling everything in and making sure it's all in the right place at the right time. Consistent file structure. This is really helpful for the operational groups because if they get familiar with it, and then they know next time you send it to them, it's like, okay, I know exactly how this works. All I've got to do, if it's one of my files, is I change the numbers that are red. I don't have to look at everything else. There's an awful lot of information there. It's great if people can just concentrate on the things that we really want to get out of them. That information about how their group works and what the calculations need to look like. Passwords and locking cells, and I'll show you, demonstrate this in just a second. Sometimes the only way to do it is to absolutely lock down the cell and to force people to only change the inputs. And there is a way that you can do that in Excel. I'll just show you that in a second. Formatting, I've touched on this already. This is using a particular format of cells. There is a standard one in Excel, but I've used my own. It's don't type a number in any cell unless it's got red text. If you do, you're messing it up. And finally, regular review of files. When the files come back from people, somebody needs to be looking at them and saying, okay, hold on, have they inadvertently changed something? Do we still have the integrity that we had when we originally sent the file out? So the first thing we want to do is we want to make sure that everything is still locked. So we're going to select the entire sheet, right-click, format cells, protection, locked. Okay, we're good. We haven't got any hidden or inadvertent unlocked cells somewhere. Now we're going to take the cells that we are going to allow people to change, format cells, unlocked, okay that, and in the review tab, we select protect sheet. We want users to be only able to select and input into unlocked cells. We need a quick password. So now, I can't select anywhere other than these cells, no matter how hard I try, unless I know the password. That's one way that we can get around the problem. It's a little brutal, but it is effective. The other thing that we need to do when we get files back from our operational groups is to make sure that the formulae that we originally created still have integrity. And a neat trick to be able to do that is if you go to the Formulas tab and you click Show Formulas, it shows you the actual formula in text format. And you can even print this out and sit down at a desk and just work through it and make sure that we've got both consistency of formulas and formulas where we're expecting. And for those of you who do keyboard shortcuts, Control and the approximation sign achieves the same thing. Okay, that's the last bit of Excel demo, John.
Okay, coming back to your final few slides here. And there we go, share screen. All right, Simon, let's go ahead and bring us home on the slides.
Great, thank you. Okay, so as we go, when we think about what is possible beyond Excel, There are options available to us under the corporate or enterprise performance management banner, and these are scalable planning platforms. They're stored in the cloud. They have centralized and scalable user models, meaning that we don't have to worry about the scale. We can simply add more users. They deal with that whole problem for us. They deal with the whole security controls. We have to control permissions, but we don't have to sit there and put passwords in Excel files and make sure we're only sending confidential budget files that have payroll information into the right people and so on. It's a third-party infrastructure, so we're not having to store, put our servers in our own building and manage all of that. And for collaboration, it's great and really easy to see what people are doing and what things are still outstanding and how it all hangs together. Having said all of that, Excel, as I hope I've been able to give you a sense of, is still really good at some ad hoc analysis. So when we think about a CPM solution, what are the features that we may want to look for? Well, the Excel front end, if we have got people used to the idea of using Excel and got them comfortable, if we take them to a whole new platform that looks completely different, they'll have the initial throw your hands up in the air horror. If we can keep them on a comfortable Excel front end that they're familiar with, it helps the process no end. Audit trails and permissions. Talks about the fact that in Excel, there's no ability to track who changed what when. The central model and off-the-shelf templates that can be customized. That makes our life an awful lot easier when we go through the process of implementation to be able to say, this is what we want it to look like. I don't want to sit down and have to redesign it all from scratch. Please give me something that already works. And finally, and really importantly, we don't want to be laboring over consolidation and reporting. We want whatever we choose to do this for us to do, break the back of it and not have to sit there and do yet more manual processes. Get back to this whole point about the finance function being under pressure and needing to be more efficient. I found out the other day that in terms of percentage points, finance has gone from being something like 7% of revenue to about 5% over the last 10 years. We've really had to lean down, and that pressure isn't going to go away. So that's the end of my presentation. Thank you very much for listening. And back over to you, John.
Great. So they're not giving us more budget. What a bummer. Okay, well, I guess that must be the new normal that everyone keeps talking about.
Right.
All right, Simon, we've got a whole passel of questions here queued up, so let's see what kind of damage we can do about these as we still have time. And we've got a number of specific questions about how you model this out of the other. So let's start with professional services. How do you recommend something that's not sort of a direct production volume revenue measure into the whole model? Is that another schedule, and how do you approach that?
I've presented a manufacturing model because it's a standard. If you want to look at a completely different business, you just need to take a step back and say, okay, look, if I am going to increase my revenues, what do I need to do? What are the true drivers behind my business? So in professional services, you've really only got three things. You've got people, both on the professional and the support side. You've got buildings, computers, and phones. I mean, that's pretty much it. So focus in on the people side of things, and then you can drive your building space just like we did with the manufacturing equipment, and you can drive all of your other costs off those people numbers. So that would be my approach in a sort of 30-second answer.
Right. There's also things like utilization rates to drive revenue, and certainly just thinking about what are your key drivers, as you mentioned. So what drives your revenues? Is it deal closures? Is it utilization? Do you have new services you're launching, et cetera? So, but I think it's all just an expansion on the basic fundamental model that you presented. Okay, so next question, how much detail do you propose to go into with the organizational functions? So your model was very neat and clean. There were just a handful of sort of rolled up payroll and other major expenses, but you could go all the way down to a chart of accounts and work with the marketing organization on that and the development organization, et cetera. So what's your recommendation to sort of strike the right balance?
Yeah, I didn't want to if I put in a full chart of accounts, it would have looked quite cluttered, and so I steered away from that. I did actually start doing that and realized it looked messy. We did that by chart of accounts, but you need more detail behind it sometimes. So, for example, that conference line, we want to know what's the breakdown of the conference so that when we come to look at variances, we've got that better information. But no, when we did budgeting, it was pretty much at the chart of accounts level.
Great, thank you. Your presentation showed moving to a more of a rolling plan, or sort of a quarterly roll. Does that mean you get away from budgets over time, or does the budget continue, but you're just rolling forecasts with greater or lesser degrees of visibility out in the future?
Yeah, so this is getting back to this point of the historic budget process and how things have changed in the future. So the way I would encourage people to think about it is the budget is a slightly more formal process, but we're still planning every 3 months. And if your budget is done well, certainly your first reforecast should be a top-up, just to adjust for any changes, timing differences, and any major things that have happened in that period. Then when you come to your second reforecast, you're already teeing yourself up for the information you're going to sit down with when you do your what do we want next year to look like in the September. And if you do that, then you get more of a rolling thing. You still get peaks and troughs. The Q4 reforecast isn't usually a big deal because now you're already thinking about your budget for next year. So it's still a little up and down. But it's not this big bang exercise done at the end of the year and then you put it away and you don't look at it for 9, 12, 10 months.
Indeed, that is far preferable. Okay, next up. How would you consider tracking budget versus actual variances with a model like this? Do you add a sheet with actuals, and we're presuming sort of standalone Excel stuff here, so let's not talk about fancy integrated BI. Let's talk about how we deal with that within the 4 walls of the budget that you've created here.
Yeah, so it's going to depend on the complexity of your organization and what you're going to want this comparison for. If you're simply presenting a comparison against budget to your executive team, then that's really just a variation on this. This then can take your budget, provide you with your budget numbers, and then you can drop your actuals in on top of it. But maybe you want to do it the other way around. Maybe you want to have a full reporting file that just pulls the headline budget numbers out of here and drops them into a reporting file. So it really does depend on the complexity of your organization and who the consumers of this information is. I mean, if you're sending something back down to the operational groups, you really want to be using something like an operational file. Here's what you said you were going to do. Here's where we've come out. What changed?
Got it. Great. Would you and why would you create supporting documentation outside of this workbook? What's the rationale to create something separate that you then have to integrate as a separate workbook instead of just building a tab into one larger workbook?
You can certainly do that. Unfortunately, the files can become really cumbersome if you just add more and more layers on top of it. And the more cumbersome files get, the more likely it is that mistakes are going to get created and hidden. So I want to encourage people to be keep it as crisp and concise as possible. It means that you're far less likely to have an inadvertent error in there. And as we know, Excel does not do full error checking. So they can crop up.
Right. Yeah, it doesn't do much error checking at all. It's mostly human. Also, I would add, just from my experience, that frequently you have things in a centralized file that you don't want others to see. And if you don't want others to see it, you can't put it in a file that you're going to share with them, unless you lock it out, but that's another layer of complexity, blah, blah, blah. So sometimes it's just cleaner to send them their own piece of it and then do some sort of integration at a later date. But that of course, Simon spoke a little bit about going beyond Excel. This is one of the reasons that Excel is limited, and when you get really large files, really large audience utilizing this, it just makes things much more complex. Simon, you mentioned early on, we had a poll that mentioned organizational indifference, and boy is that a tremendous issue, especially given how busy everyone is these days. Any pointers on how to overcome that?
Yeah, absolutely. When I originally wrote this, I actually had quite a lot in there, and I felt it was a little cumbersome. That's why I did the polls to see whether that sense was right or not. And if I was to do this again, I would put something back in on that. What we need to do is we need to appeal to people's in their own incentives. People are going to do what is in their best interest for the most part. And if they've got 20 different things screaming at them, we need to make sure we're amongst the 20 and knock the bottom one out of the list. So how can we do that? Well, the budgeting exercise is two things for these people that they really need to buy into. First of all is, if you're struggling today with the time, or if you haven't got the resources you need to engage in the budgeting process, because that is how, as a corporate entity, we are going to allocate resources between the different groups. So you need to tell us what you need and why you need it. And then the second thing is to and I've lost my thought. Sorry.
That's okay. We can stick with one thing.
Okay. All right.
And you have certainly done yeoman's work here covering all the content today. And actually, I'm going to go ahead and take that thread and go with it here. So that's all the time we have for questions today. We had a whole pile of questions we couldn't get to. I don't think I've ever seen this many questions before in an event, probably due to so many people being online. Simon, can we work with you after the event to perhaps get some of these questions and your responses posted in the community for all to see?
Yes, we can.
Great, so we'll be working on that. Also, as we mentioned earlier, Simon is working on turning this into a course, which will have a little more detail in it because he necessarily had to follow the webinar timeline, but hopefully that course will be forthcoming very shortly here, and that will include a download of what will probably be a slightly updated version of the Excel file as well, a little more complete for you, although it's fantastic as is, and thanks so much, Simon. We've got a few final items we want to do really quickly. Join us at performative.com. Yes, you'll see the rest of the Q&A in there, but also we have hundreds of discussions on the site already around budgeting, forecasting, and planning issues, Excel issues, etc. If you want an introduction to Simon for future networking, etc., or if you would like to connect with today's sponsor, Altius, please do let us know on the post-event survey. Also, if you'd like to know about Performative Academy, tell us on the survey. We're happy to reach out and let you know more. Simon, fantastic job today. Thanks again so much for joining us.
Thank you for the invitation, John. Really appreciate it.
You bet, and thanks to our good friends at Altius, whose thought leadership in this realm and our support of what we're doing here at Performative helps us make this educational webinar possible and delivered at no cost to the participants. And now, without further ado, let's go ahead and hit that third and final polling question. We're launching it right now. We're not going to have time to discuss the results, but this is the third polling question for CPE. I remind folks to stay on for just another minute. As soon as we close down this polling question, we will send you to the post-event survey, and that's where you can request all the connections and the more information, and also tell us how we did today. Good, bad, otherwise, we always want to be doing better. So I'm going to leave this open for another 5 seconds. Let's make sure everyone gets all of their feedback in. And I'm going to go ahead and close that down now, and we will move to close down the entire event. Thanks, everyone, for joining us. We hope to see you again at another Performative event or online at performative.com. Have a great week.